Hey, good morning. All right, welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. We're interested in technical and fundamental analysis with the overriding goal of trade planning. We're patient, disciplined traders. We're looking for conservative, repeatable trades. We're on the get-rich-slow scheme by actually creating value, not trying to get rich quick. It is Remembrance Day or Veterans Day, so I'd like to give a minute of silence in honor of those that have served. So once again, that was a minute of silence in honor of those that have served. Just a brief history of me. I wanted to be an astronaut in my early years. Hey, everyone wants to be an astronaut. I actually worked at NASA for a couple of summers. I was an aviation major. And my path was to become an astronaut. I interviewed every single branch of the military, received offers from every single branch of the U.S. military. Bear in mind, I'm a Canadian citizen living in the United States with a green card. So I was interviewed, received offers, which was really interesting. And the Navy gave me the best offer because, you know, the military knows exactly how many flying hours you need in your logbook before you could work for an airline like Delta. That's why a lot of people join to become a pilot. So anyways, the Navy gave me the best opportunity to fly, which is great. But before I could do that, they had to test me. The first test had to do with written tests. So I went in and did examinations. And it turned out the written examinations, which were brutally difficult because, you know, they're looking for officer material. The interesting part of that is it was actually a psychological test. So that was interesting. So I passed all of that. And they gave me the offer. I signed the agreement, and there I was in the United States Navy. So that's where I joined. I signed up. But then your very first day of military experience is going through medical testing. And I went through and they discovered I had diabetic tendencies and they kicked me out. That was it. They gave me, after being put up in hotels and driven around, basically chauffeurs, they gave me a subway token and said, find your way home. So that was my experience in the United States military. I did sign up. Now, a lot of people signed up and made careers out of the military. Some people volunteered and some people were thrown into war, but nonetheless, thank you to those that have served. Okay, so there's unusual risk today. Oh, you know what? I need to do this. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. So welcome to Forex.Today. Now, one of the things I wanted to point out in honor of those who have served. The bond market is closed today. So foreigners and domestic traders that typically buy and sell bonds. Now, bear in mind, the bond market is way, 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 way bigger than the stock market. So when you log into the media, they want to talk stocks. They want to talk stocks. This is the hot stock of the day. It's puny compared to the bond market. So you want to think about it that way. The real market, the real money mover on this planet is the bond market. Okay? So that bond market is closed. That money that might have come into the United States today to buy or sell bonds is not going to flow. That is a flow of capital that has cut off today. And that doesn't mean, I don't know, that we're going to have a big day, a bad day, a zero day. It just means it's very unusual, and it does have a direct impact on the value of currency, in particular, the change of the value of currency. So you could just say, I don't know what that is. I don't know what that means, except that unusual cutoff of a capital flow directly impacting the value of currency is turned off. So that is now a risk. That's why I didn't do the day trading group last night, because I didn't want to set you up normal trade setups in an abnormal market. It's not a good idea. The second thing that I want to tell you about is that it's a banking holiday. Banks are closed. So that flow of capital through the banking system, let's just say like wire transfers, are not going to happen today in the United States of America, which is just the largest economy in the world. So it's going to have some impact. Again, is it a good impact, a negative impact, zero impact? I don't know. But it's an unusual situation to say no banks are going to be sending money into or out of the United States today. So once again, I would say that is a risk, and that should be addressed. It should be recognized that this is not an ordinary day. And then lastly, a comment I want to say, you may have noticed that the last few days we've had some pretty dramatic, what I would call whipsaws. Your customer says UK as well. I don't know. I don't live in the UK. Google it. Maybe. I don't know. Okay. Okay. So anyways, wait, now you threw me off. What was I saying? Oh, the whipsaws. And by whipsaw, what I mean is like yesterday, we had CPI come out. It was a huge reading. Okay. Oh, your customer. That makes sense. Okay. So on the 11th day of the 11th hour, right? The Germany surrendered World War I, unconditional surrender at Versailles. So it would be a holiday for France. It would be not a holiday for Germany, right? Like, hey, remember that awesome war we lost, right? Like that makes sense. Okay. But anyways, so CPI came out yesterday and it was red hot, right? Like the biggest jump in inflation in a long time. Well, it shouldn't be that surprising, but anyways, it happened. And there was some movement, and then the yen weakened and the dollar weakened, which makes sense to me. There was a big spike. Great. I waited for pullbacks, which I got. I entered trades at support, like daily pivots. And they all crashed. Not a 382 retracement, not a 50% retracement, not a 618 retracement, but at least 100%. Now you might argue, well, in the high time frame here, no, I get all that. These are just trades. They're not, they're just trades. But that is unusual. That's all I'm saying. And if you're scratching your head like, what's going on? Remember what the central bankers told us. I just want you to stop listening to opinions from the media and, whoever you read about the end of the world and all this kind of stuff. Let's just clean the slate. What do we know is factual? The Bank of England was in a press conference and Bloomberg said, why have you been signaling that you're going to raise interest rates and then you didn't raise interest rates? And the head of the Bank of England, Bailey, said, I never said that. You said that, media. It was actually Bloomberg pushing the question. He's like, dude, we never said that. You said that. So if the market mispriced it, that's not really a fault of the Bank of England. The head of the Reserve Bank of Australia, Governor Lowe, said directly, again, so, right, Bailey directly said the market mispriced assets. We didn't say interest rates are going up. They priced it as if interest rates are going up, and they were wrong, but that's not us, okay? So then Governor Lowe, I think a couple of days earlier, directly said that he could see that interest rates in Australia are priced in. And you can easily calculate that from the bond market. You can derive that interest rate hikes in Australia have been priced in. He says, we see it. We recognize it. He's like, but I don't know why. I don't understand why they're pricing it in. We're not going to raise interest rates this year, next year, or even the year after. Not until we see wage growth over 3%. And it was only at 1%, and wages don't grow that fast. So if you carry that out throughout, like you could derive that even the Fed is saying that too, right? The Fed's like, dude, we're not going to raise interest rates. We're starting this taper. That's going to be slow. And we waited a long time for that. And then we expect inflation to come down. So there's no reason to raise interest rates when inflation's coming down after the transitory period, right? So the central banks are telling you the market has been wrong. And so I kind of look at this, the whipsaw price action type stuff because if you're a bull, it rallied up 100 pips and that's good. And then it collapsed 100 pips. But bears may have been very similar too, where they sold and then it rallied up, knocked them out, and then it crashed. So you might have done well in these markets. I'm not saying you can't. Okay. And day traders are probably doing the best, or intraday traders are doing the best right now, which is great because every strategy has strengths and every strategy has weaknesses. And so they're probably outperforming because they're more sensitive to price changes on the short run versus, longer run and other strategies. But nonetheless, it is unusual activity, in my opinion. And I think what we're finding is that the market is realizing that indeed they were wrong on pricing interest rates going up across the world. And so there's a new price discovery based on that. So I just want to throw that out there. One of the things I've done is I've still been trading, but I dropped my lot size by 66%. Okay. And I'm still taking good trades and they're not working out. Cool. Fine. Great. The goal is to take the valid opportunities and then manage the downside risk. And that's what I'm trying to do. Okay. So interesting, right? But you'll see the fluctuations in the bond market and all that kind of stuff. So let's move to that. Also, this is when my opportunity to say, look, I get asked for a lot of help and people want training and they want live groups and all that kind of stuff. The links to that stuff, my book, FX Bootcamp training courses, and inside the training courses are the live groups. Those links are in below, right? FX Bootcamp. There's even a coupon code to save you some money, which is really cool. Okay. If you want to buy my book, if you do better reading, the link is in the description below. Don't worry. I'm not pitching to my book so I can get rich. I think I make less than $5 if you buy my brand new book, right? So I'm an author. I sold the rights to Wiley Publishing. So you're making Wiley Publishing rich, but I think you get to know me in that book and my trading style and philosophy. So there you go. So if you like that, that's there. And of course, if you need a broker or you're dissatisfied with your broker because maybe they're slow, maybe there's slippage, maybe you're getting negative swaps on both sides of every trade, and you're like, dude, that's just not right. Then in the description below, you'll see there's a link to Trader's Way. You'll find the execution speed is fast, the fees are more than fair, and that you get paid the full swaps due. So that link is in the description below. If you need help, it's already there. Cool. So welcome. Cool, right? So yesterday, we had this period of dollar weakness, and then whoa, okay? And then yesterday we had this. So, where'd my drawing tool go? Okay, we had this, and it was just amazing Japanese yen weakness. And I was trading the Japanese weakness because it was what I was expecting. And post CPI, it made sense to me for the Japanese yen to be weak. And then a couple of hours after the news, then we got this full-on reversal. Okay. Della, when it says in giant caps, COVID-19 is the coupon code, that would be it, COVID-19. Okay. So when COVID-19 hit and people stopped going to work, and I realized there's going to be a lot of people at home, I don't recall what it used to cost for FX Bootcamp. I think it was like, honestly, I don't remember, $3,000. Maybe, honestly, I don't remember what it was. But I dropped prices by 78.6%. And then what I said is, instead of meeting once a week, at that point, we started meeting every day. So I dropped prices by 78.6%, and then I increased the amount of service I provided by 400%. Cool. So anyways, so I don't know if the 78.6, so I've changed prices again. I probably need to update that. So it does lower it, but not by 78.6. So I'll look at that. I forgot that was in the description. Okay. Della says, hasn't placed a trade for 2 weeks, hasn't seen a single trade. Well, what I'm saying is, I think there has been some good trades that didn't work out. Okay. That's all. I'm sorry. It's all in the description below the video. Just, okay. So anyway, so yen is strong right now. Dollar is strong right now. CAD got crushed. Okay. So there seems to be a risk-off mood right now. I'm going to move these to a higher time frame, see if it makes a difference. Okay. Yeah, that's right. That's okay, right? Pat, no, that's fine. We do a lot of group work, though. Yeah, Jim says, yeah, it was $3,000. Yeah, so anyways, now you can pay $500 for a $3,000. Yeah, anyways. So I'm just trying to serve. All right. So let's take a look at this. Okay. Kiwi down, Aussie down, pound down, euro down. So there's nothing really to buy. This looks like a seller's market. Okay. Okay. Right, Pat, if you join the swing trading group, we meet tonight at 4 p.m. We just changed Well, actually, yeah. Well, wait. We changed the time a couple of months ago, and then now we're changing the time back to 4 p.m. And that's a weekly meeting, right? And so we're looking at things like setting up next week or the end of the month and that kind of stuff, right? And it's a good opportunity for group work. It's a good opportunity to have conversations. Those meetings can be anywhere from an hour and a half to 3 hours. Okay? Depending on what we're doing, what we need, what we feel, that kind of stuff, right? Yeah, we are. We are because today is the banking holiday. The swing trading group, we're planning trades for tomorrow, for Monday, for the rest of the week, next week so it's not about trading today. It's about setting up next week, right? So yeah, we would meet tonight. Cool. All right. So let's start with commodities and see what's going on over there. Okay, CAD coming down. As you saw, CAD was quite weak. And oil repricing. We were at 85. Now we've come all the way down to 80. So interesting. Some of the things that were talked about recently was OPEC. OPEC didn't want to change the plan they already have. And you have to understand, every time oil prices are low, the United States calls Saudi Arabia and said, "What the hell, dude? Prices are so low. You're doing something wrong." And then when prices are high, the United States calls Saudi Arabia, "What the hell, dude? Prices are too high." And Saudi Arabia is like, "Just stop calling." You don't like it when they're low. You don't like it when it's high. Like, just stop calling. We don't want to talk about it. Okay. So OPEC said, look, the plan was to raise oil prices from zero. We've done that. And we're back to what oil prices have been for the last 10 years or more, in fact. So that was the response from OPEC. So that would push oil prices up. And then the United States, aka Joe Biden, had the opportunity to tap into the Strategic Petroleum Reserve, the SPR. Okay? Do you guys know what the SPR is and where it came from and why there is one? If a few people say no, I'll explain it. If nobody says no, then I'll just move on and just say that should be supportive of oil. So that wouldn't have been it. Right, Jim, they basically said, look, we know the frackers are going to frack. The thing is, it takes a while to turn that on. Okay, a few no's. Okay. I'll do a medium explanation, not the full explanation, but just because I could do probably the 2-hour version, or I can do the 5-minute version. So let's do the 5-minute version. Okay. The United States, okay, the U.S., in the early days grew exponentially. We're talking about New York City building skyscrapers, and they were building them as fast as they can. The Chrysler Building, the Empire State Building, and so on and so forth were all basically built at the same time. There was a lot of contributing factors to that. Post-World War II, the economy was booming. Why? Well, the economy in Asia was decimated, and the economy in Europe was decimated. Literally, cities, factories, everything just leveled. There was no European economy. So guess what? The United States benefited from being the only, global power, right? So United States benefited, but they also, benefited from cheap steel to build all those skyscrapers, which was new technology. Instead of building a building out of brick, you built it out of steel and then clad it, right? And the other thing was cheap energy. Okay? Cars, airplanes, and everything were just coming online like crazy. And they were getting cheap energy from the Middle East. Okay? And the United States and Europe, which was rebuilding, also needed cheap steel and cheap energy. And so one of the things they did is, the United States in particular, but probably also Europe, dictated the price they would pay to Middle Eastern oil producers or North African, right? So they're like, Libya, this is how much so Libya would negotiate with the United States, right? Algeria would negotiate with the United States. Iraq would negotiate with the United States. Iran would negotiate with the United States. Saudi Arabia would negotiate with the United States, and so on and so forth. And the United States, being such a huge power, would pay them low money. And this went on for decades. Okay? And the Middle East got more and more upset by this. They're like, dude, you're underpaying us. 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 And the United States says, yeah, we hear, but we just don't care. So after a long period of being, in their mind, underpaid, the Middle Eastern countries banded together, or the oil-producing countries, including Venezuela, which is not in the Middle East, but whatever. They all got together and said, if we're going to be underpaid, we need to band together as a cartel so that we can negotiate a better deal. And if they pay us a low amount of money, we'll just cut them off until they pay us a fair price. Okay? So anyway, so OPEC was created to push up prices up. Okay? So the United States and the UK and the rest of Europe, and then later on, I believe Canada and a few others, what happened is they're like, oh, snap. Okay? OPEC. Well, we'll create, right? This group here created the International Energy Administration, the EIA. Now, what they said as a group, so basically think of this as OECD countries, okay, basically. And they said, we're going to create this IEA group, and if OPEC says they're not being paid a fair price and they embargo, they cut the rest of the world off from their oil, they just stop selling the oil, then the EIA will come in, because all these countries, the OECD countries, and there's a lot of them, they put oil that of their own, okay? Canadian oil, US oil, UK oil, Norwegian oil, so on and so forth, gets put into a strategic petroleum reserve, the SPR. Think of it as a rainy day fund. If OPEC cuts the world off, they have all this oil that will get them through maybe a month or something. Okay? No, Russia's not part of the EIA, I believe. Okay? Oh, you're saying OPEC. Well, OPEC Plus that's a newer concept. But yes, now it's OPEC Plus. So anyways, so that's what the Strategic Petroleum Reserve is. So every country has just in case oil. And so now that oil prices are high, the president's decided not to tap into that. And there's probably political reasoning for that. Okay. Really what should happen, because the United States is an oil producer, $100 a barrel oil should spur innovation and exploration, which I call pro-capitalism. So right now, okay, you could say supply and demand, okay? Right now, demand is higher than supply can produce. So price and quantity, right? So the price of oil is high. Okay? So if you leave capitalism, now it takes time because you can't just like, oh, you need oil? We'll produce some oil. No, you got to go find it or find new ways of squeezing it out. So like, I know an investor who's putting money into certain oil wells in Texas using innovative technology, not fracking, but similar to fracking, but using enzymes and such to get oil out of used wells, to go back into the well and get whatever residual is left, right? So that would be innovative. And if you're not that company, then you got to go find new reserves. So you got to go find it. You don't just like call Amazon, right? You got to go find the stuff. And this stuff takes place, but the high prices pays for the innovation because that takes money, and exploration takes money. Okay? And so the high oil prices will pay for that. Eventually, I'll tell you, if this is a good price, you will get innovation created. You will get exploration created. And if the government depresses that because they think today oil prices are too high and that's bad, well, you're going to never get innovation and exploration because there's no incentive. They won't even make money if they do it, if you drop these prices. So in the long run, this is actually a good thing because, then supply will catch up. Oops, I went the wrong way on supply. Sorry. Supply will catch up and you'll have a double shift, which is indeterminate, but definitely back down. You just don't know how down because you don't know how innovative and you don't know how much you'll find when you go looking for it. But nonetheless, you should just leave capitalism to do what it needs to do. Okay? And so Joe Biden said he wasn't going to artificially lower that by increasing supply from the SPR. And that's good because really, if you want U.S. oil producers to do well, you need to let capitalism work. Okay? So anyways, there's my thought on that. So why is it coming down now? Well, we're sort of in a risk-off mood. A lot of, like I said, inflation is high, but we already knew that. And I think a lot of people still mispriced what was going on. And so now, because of the mispricing, we're going through a new price discovery. What is the appropriate price? What will happen in the next 3, 6, 9 months? Okay. And so the market participants are trying to think of it. Like, put it this way. The stock market at the all-time high, oil prices on its way to $100, all this kind of stuff. We're trying to figure out what to do with the U.S. dollar because of the changes in the Fed policy and changes in economic conditions. And there's just a lot going on and there's a lot of sort of risk built in. But if you back away from today, last week, and next week, like let's just get away from, let's just say the last 4 weeks. What do we know? We know Americans have lots of money in the bank. Typically, Americans have a negative savings rate. But right now, there's a strong positive savings rate because the U.S. government gave everybody money for free. Where do you think some of the inflation came from? The U.S. government created the inflation on purpose. So anyway, Americans have money in the bank. They've paid down their credit card debt. The value of their homes have gone up. So the household wealth effect is quite positive, which means consumption should continue to be strong because there's money they haven't spent yet. Now, yes, and prices are up now, but prices should normalize, and in particular on the input cost, should normalize over the next 1 or 2 years. I don't know about the next couple of weeks, but over the next 1 or 2 years, supply chains will get closer to normal or completely normalize. But that would be good. So now you can get your crap from Amazon.com in 2 days and all that kind of stuff. Good. Right? Like, aren't those the important things? U.S. corporations, small, medium, and large businesses are all trying to hire. Can you imagine if they were not trying to hire? We would be in dire straits if corporations are like, there's no way we're going to add an employee. In fact, we're thinking about cutting employees. That's not what's happening. Every single company is looking to hire. From every restaurant and bar all the way up to, artificial intelligence programmers in the Silicon Valley. Everyone is in high demand. That's a good thing. Okay? We need to get through COVID-19. As I mentioned before, millions of women lost their jobs when COVID-19 hit, and only 200,000 women went back to work in the last year and a half. What does that mean? They're at home taking care of the family because, I don't know, kids have to stay home or this, that, and the other thing. I don't know, but it's a problem. So we got to work that kind of stuff out. But it's not like Americans are broke. It's not like you can't get work if you're looking for work. It's not, there's a lot of positive stuff. And as long as that positive stuff is there, in general, the stock market should rise. In general, the bond market should fall. In general, the dollar should weaken. But right now, we're going through, like a price discovery period. But maybe don't overthink it, but be cautious, right? I don't think houses are overpriced here, but maybe. Okay? It's like if you bought a house during the financial crisis of 2008, you're fine. If you bought houses when COVID came down, you might have got a couple of deals. I saw a couple of deals. There weren't many. But, right? So I don't know about new home buyers, but check it out. A new home buyer will get a very low interest rate. So people don't necessarily, it's very poor English. They don't say, I can afford $1 million house. They kind of do, but they kind of don't. What do they say? With a mortgage of 3.5%, the mortgage payment every month is $5,000, and I can afford that. Okay? Okay, that's your debt service ratio point of view. Then you also look at the value of the house. You're like, okay, so that gets me $1 million house. And housing prices are going up right now 10% or more per year. So you're like, okay, I'm going to pay this down $5,000, but this house is going to be worth $1.1 million in a year. So you made $100,000 and you paid this down by $60,000. So through the beauty of amortization and appreciation, you're up $160K. Okay. So it's really this. Okay. Now, if your mortgage suddenly goes to 5.5 and your mortgage now is $7,000 per month, you're like, ooh, I can't afford $7,000. So this will drop how much you can buy a house. And that's when things change. But we're not there yet. Okay. So that's how I'm thinking about it. Okay, Pat? Okay. And right now, the loan to value on homes we're in good shape. Banks are not lending to unqualified investors. And also the DSR banks are looking at it as well. And they're banks, and by the way, banks in the United States, banks in Canada, banks in Australia, banks in New Zealand have all specifically outlined the LVRs and the DSRs in the banking systems that they regulate. They all specifically mention that. And what they're saying is banks are not taking undue risk. Banks are flush with cash. Do you know, right? When I told you Americans have money in the bank, usually they don't have money in the bank. Usually there's a negative savings rate. But right now there's a positive savings rate. Okay? The overnight repo market is in chaos. And the reason, right, reverse repos are in chaos is that there's so much money right now. There's so much money in the banking system. The banks are dumping the money and putting them in money markets. Okay? And the reverse repo also uses the money market. And the Fed has been using the money market because they've been buying bonds and treasuries, right? But what's the consequence of that? There was nothing to buy. Everything was sold. There is so much money in America now from the Fed spending money, and even worse, the U.S. government spending money. Trillions, right? Trump did trillions, then he did another trillion, and then Biden came in and trillions and more trillions, and now infrastructure trillions. It's all added up to the point where there's nothing to buy in the money market. And they're all competing with each other, right? Banks give their money to money market managers. Money markets go into the market to try to buy stuff, but they're competing with the government, and there isn't anything there. And then there's a crisis in these reverse repos because there's nothing there. And that's how much money there is. Okay. So again, if you don't quite understand it, it's a little complicated, but Google reverse repo. And you're going to find a lot of YouTube hype, but maybe you'll find something that will just explain it better than I did. But just imagine that there is a crisis going on that you don't see, that like bankers see. Okay, bankers. We're just talking about normal banks doing things, right? There's so much money. The banks are drowning in the cash because people are not borrowing money. And banks are in the business of taking cash in and lending it out, but no one is asking for loans. So instead they put it in the money market, but the money market has bought all the assets already. And so more money comes in and they're like, thanks for the money, but we got nothing to buy because we're competing with the government, and the government's buying everything we would buy. And it's crazy. No. The turmoil has nothing to do with trust. It has to do with banks have money, but they haven't loaned it out. Why? First of all, Americans have money because they got free money from the U.S. government. It goes right into your bank account. Free money. We have also received checks in which you deposit. So all this free money has come up. Like, honestly, my family has received thousands of dollars from the U.S. government. We didn't ask for it. We didn't fill out any paperwork. It just showed up. Amazing, right? Just amazing. So all of a sudden, it's now in people's bank account. That's what's going on. The second thing is there's low loan demand because people were scared during COVID that what if they lost their jobs, or maybe they did lose their job. Okay? Except for people leaving New York City to go to the suburbs. Basically, everybody else said, I'm just going to stay home. I don't need to buy another home. I don't know what's going on. Instead, what they did maybe is they took their stimulus money and they built a home office. That's what we saw in the Home Depot stock and all that kind of benefit from. But no, it's not the trust issue. There's too much cash because people got free money. The second part is there was no loan demand because people didn't want to buy a house. People took stimulus money to pay off credit card debt and all that kind of stuff. So people just didn't need to use their credit cards. They didn't need a new mortgage. Okay, for most people. So now the bank has too much cash. So now they invest in the money markets. Now the money market guys have to invest it. And then there's nothing to buy, like a money market guy would buy, whatever. And the money market people are competing with the government. And the government's buying up everything because of things like quantitative easing. So now the banks that got money from their depositors, which got money from the government, then the government comes into the market and now are competing with the banks who need it because now they have too much cash. And all of a sudden it's really weird. Okay? It was really weird. Right? So that's what that's all about. But what I'm trying to say is on the long run, Americans have cash. Retirement accounts are going up. Long-term investments like real estate are going up. Why are stocks going up? Demand is high. right? So we'll call that consumption. So this cash that people have, they're actually spending it. Now, where does the inflation come in? Well, the companies are having problems getting stuff either here to make it or to get it to the store to sell it to you. But that's not a demand issue. That's a supply issue. Demand is good when we figure out supply, which I'm certain is directly correlated to COVID-19. Once that goes away in 6 months, a year, 2 years, I don't know when it'll go away, but when it goes away, we will have consumption, which will push up the stock market, which will push up the real estate market. And eventually people will draw down their cash because they spent their COVID-19 money over, let's say, the period of years. So they bought all their new iPhones and big TVs and all this kind of stuff. So when they consume it, hopefully they buy assets, but we know most people don't buy assets. They buy garbage like cell phones and televisions. So they'll consume that free money. That'll push up the stock market. That makes rich people richer. That pushes up the value of assets even further, like real estate. And here's what I think, just to put a cherry on this ice cream. Inflation will come down. I don't know if it's next year or the year after, but inflation will come down. It is transitory. Not all of it, but most of it. Okay? Yes, wage growth might go up to 2%, but inflation will come back down to 1.5% or something, right? And wage growth will be higher, and that's good because now that'll push up stock market and real estate market. But also, what will that do for us? Low interest rates will remain. What does that mean? That's called a Goldilocks economy, where you have strong growth from demand, reasonable inflation, which is less than growth, right? And you have this perfect economy where everyone is doing well and prices are stable. And if that happens, once again, the stock market will continue going up. Okay? And what I said back in 2020, early 2020, is that this process that I'm outlining now will last to probably 2028. So, if any of that is remotely true, like that's a base case, if any of that is reasonable, and you can see I'm talking years in advance here, then what's happened over the last 4 weeks as we're looking at inflation, and that freaks some people out, and then you listen to the central bankers and it doesn't freak them out, then you have these markets where some people have a strong opinion one way, other people have a strong opinion the other way, the same way central banks say, no, we don't need to raise interest rates. And some market participants say they definitely have to raise interest rates. Well, there's this great divide. And we need to figure that out. But on that long run, on that long run, I'm hoping the reasonable truth, the reasonable model of future reality is that demand will remain there. We will somewhat over time fix supply constraints, and we will have a normal growth economy with wage growth, which we didn't have before COVID-19, and continued low interest rates for a very long time. And that's actually very, very good for everybody on planet Earth. Okay? So William says, let's tackle the other side. William says, what about supply chain problems? Chinese production has practically been halted. Yeah. Okay. So let's talk about China, for example. Okay. Do you guys remember yesterday I said we're in a big political week, and Joe Biden's claiming victory because he set up a Zoom call with Xi. And he's like, look at me, I got a Zoom call. Well, I'm like, dude, I think Xi played that out where it's a huge political week in China where there's the big communist meeting, right? It's the big one, okay? The big meeting. And I said, well, what Xi is going to ask for is a third term. And that he's going to go into the meeting saying, well, not only have I been an effective president of this country, but guess what? I got meetings set up with the president of the United States and I got work to do. And if you're not going to put me in, then that meeting needs to be canceled. And like, dude, just let me do a third term. Do you know what it looks like he got? This came out today. Do you know what he got? Unlimited. Yeah. As far as he's concerned and as far as the Communist Party is concerned, Xi Jinping is going to be president of the Communist Party of China forever. He pulled a Putin. Yeah, he pulled a Putin. Yeah, not only did he get a third term, he got a forever term. Oh, snap. Which is really good for China. Now, you might say, whoa, wait, he's a good person or a bad person. Like, how dare you say that about, whoa. What I'm saying from an economic point of view, I'm not looking at political views here. I'm not looking at the philosophical arguments of capitalism versus communism versus, and by the way, capitalism can work with communism. China's doing a good job on many fronts with capitalism. So what it's really is democracy versus communism. Okay. And that I'm not talking about that. What I'm talking about is a command and control economy has very strategic advantages. And okay, which is very hard for democracy to compete with, because in democracies you have to talk about it forever and ever and ever and do almost nothing. Okay, where in China the person in charge can just say, knock that entire city down, move those 3 million people out of the way, we're going to build a new city, and then they can come back or whatever, right? Like really hard decisions can be made quickly, where in a democracy, the classic example is California has been planning a high-speed train, a bullet train, from Los Angeles to San Francisco for 40 years. It just never gets done. Okay? So, anyways, now the next thing is, in a democracy like the United States, every 4 years you have to replace your president or re-elect your president, and it can only happen twice. Now, presidents come and go. If you're Xi Jinping and you're the head of China and you're there for 40 years, you look at the world differently. And you see presidents come and go and they bark at you like yappy little, Pomeranians. And they're like, whoa, United States, just calm down, right? Here's a cookie. Calm down. And that allows China to have literally a 10, 15, 20-year plan. Right now, China has a 5-year business plan. They publish the business plan. At the end of the 5 years, they review the results of the business plan and then create a new business plan. Well, the United States doesn't have a business plan. They don't know what they're going to do tomorrow, right? So it's really powerful if you look at China like a corporation, if you will. Again, I'm not looking at the philosophical differences. If you looked at it like a business, there's a business that has a transparent business plan. They track and measure their progress, and they have a leader that can sit there for 30 years doing really big projects. In the United States, it's like, I don't know, a song and dance. You got to tap dance and look at, right? You got to do that, right? And you're in front of the media and one tweet and you're out. And so I'm just saying, it's going to be difficult, right? It's going to be difficult to compete. And for China, I don't know if he's a good president or a bad president, a good leader or a bad leader. That's for you guys to debate. I don't live in China. I'm not Chinese. I don't have boots on the ground. But I've been to China a lot. I've been to many cities all across China. I've even had, meals with, I had lunch with the governor of Sichuan. I've had lunch with the mayor of Chengdu. I know a little bit. And I'm just saying it's going to be hard to compete. If they put a leader in charge for the next 30 years, it's going to be hard to compete. There's going to be serious competition. It's going to be serious competition. I don't know if Joe Biden's going to win a new election, the next election, right? I don't know. I have doubts. But even if he wins to be reelected, she was there before him. She's going to be there after him. And therefore, that's going to change the outlook of how she plays his cards. So anyways, it's, wow. I mean, so we call this international political economics. And I took a wonderful class at Harvard on that. And it's really interesting when you're thinking about it strategically. And what this means is, like, part of the class was game theory. What it does is it allows Xi Jinping to change the way he plays the game. Okay? He can literally change the game in very strong ways. Because he's like, well, Joe Biden's probably going to be gone in 2 years. There's a lot going on in China. He can just push off any serious decisions with the United States a couple of years. And if Joe Biden, why sign a deal with Joe Biden if he's going to be gone in 2 years and there's going to be a new president and this guy comes out and it's a new dog? You're like, why do a deal now, right? Like, you did deals with Trump, and then Trump's gone, and now Biden's here, now Biden's doing stuff, and like Xi Jinping could just say, you know what? Wow. And he could play the game differently. So again, no philosophical commentary here, but that is an interesting play for China. That's an interesting play. Right now, Maida's like, on the long run, it could be very, very bad for China, because we've seen that absolute power corrupts absolutely. And that it has in the past, in many, if not most, if not even all circumstances, on the long run, it's bad. So the twist here, Maida, and I'm not disagreeing with you either, right? I have immense respect for your opinion. The twist is what I'm saying is, this time they're capitalists. Okay? This time they're capitalists. I have a problem with communism. Fine. But this time they're capitalists. So it'll be interesting to see how they handle the experiment of capitalism, because true capitalism hasn't been around that long. Right? And so it's still a social experiment. So how do they move from the socialist governance into capitalism, incorporate the two? And I think capitalism will say socialism might have some upside, but it has a lot of downside, and they don't really play well together. So China will become a little more probably less communist or socialist, whatever word you want to use, a little less socialist and more capitalist. And there's going to be a blend over the next 25 years. And they'll find their way. And the United States has its own form of capitalism, which is different from Canada. And Canada is similar to the UK, but the UK is different from France, and France is different from Germany. They're all capitalist, they're all democratic, but they're all slightly different. So they're all experiments. We haven't found the perfect model yet, and we have a new competitor in the capitalist model, the combination of communism and capitalism, and that'll play out over time. Okay? And we don't know if they're right. We don't know if they're wrong, all that kind of stuff. But if you're comparing, communist Cuba to like communist China, it's not a fair comparison. Right? Like, for example, communist China, let's say 50 years ago, and communist Cuba 50 years ago. What was the GDP per capita of these countries? And it would be very, 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 very low. The average person on the street in Cuba 50 years ago, in China 50 years ago, was very, very, very low. And now you look at the per capita GDP of Cuba today, I would guess it's also still very, 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 very low. But the productivity per capita, the GDP per capita of China has skyrocketed. Now, the political philosophies have not changed in either government. So what was the major difference? What made China very, very, very rich compared to 50 years ago? What made Taiwan very, very rich 50 years ago? What made Hong Kong very, very rich 50 years ago? What made India compared to what it used to be, right? What made South Korea very, very, very rich? I don't believe it was democracy, but I do believe it was capitalism. Now, one thing I do know about Cuba is I asked Google the other day the obesity rate in Cuba. Did you know it's the same as the United States? I just thought it was interesting. One of the things I used to think is if you were poor, you were skinny because you didn't have any food, right? What it turns out is if you're poor, you're fat because you eat crappy food. And it's really interesting. It's one of those things where I keep searching, right? I keep searching and I haven't found I've been wrong on that one, right? Which is interesting. And by the way, it's something like 42% of Cubans and Americans are classified as not overweight, but obese. I just thought it was interesting. By Cubans, I mean people living in Cuba. Cuban, residents. Okay, so anyways, I just thought it was interesting, just a sidebar. All right, so anyways, so prices come down here on WTI, and I think it could go up. But that's not for me to say. Is there a major reason here? Well, what really happened was the market got spooked yesterday with high inflation. We're debating what that means, which is normal. Okay, we're debating. That's what market participants do. There's bulls and the bears, and we're debating on what all of this means. But did we tap the Strategic Petroleum Reserve? No. Did OPEC increase oil supply? No. What this is about is some market participants, maybe they're right, maybe they're wrong, we don't know. But some market participants believe the higher interest rates are going to be bad for Americans and consumption will fall. Demand for, WTI products like jet fuel, gasoline, motor oil, plastic, tar, makeup, nylon, fertilizer, all these things that get cracked out of petroleum, demand will fall for. Now, I don't agree with that, so I'm on the other side of that, but it explains why this fell. It wasn't an increase of supply, but it was a change in demand. Assumed change in demand. Because I don't think CPI came out yesterday and then orders were canceled. Orders meaning orders for crude oil. Who buys crude oil, by the way? Refineries. And why do they buy that? They crack it to make the products I just mentioned. So they didn't see like CPI come out and they're like, oh my God, look at the inflation. We don't want to make jet fuel. We don't want to make tar. We don't want to make plastic. We don't want to make gasoline. Cancel all our orders. That didn't happen. So this is an assumed change in demand, and it may last, but it may not last. So that's how I'm looking at it. So I don't know the future, but I'm trying to share with you my logic and my thinking. I might be wrong, but this is what I'm thinking. Okay? Okay? Cool. Is that all right? Click a thumbs up if you appreciate just the open conversation versus me giving you my BS opinion. I try not to give opinions. I try to explain what I'm looking at, how I'm looking at it, and my reason for, let's say, a bias or something. Okay? So click the thumbs up. Right. Thank you. Cool. All right. Gold. Yeah, we can do gold. So we'll do gold. We'll do Bitcoin. And then we'll go through like all the dollar pairs and the yen pairs. Is that cool? So thank you for all the positive feedback. All right. Gold through the roof. Wow. So what's really interesting is the standard operating procedure after this is to buy it here. It's difficult to typically buy in a situation like that. Okay? That's a difficult purchase, even though it worked. I would be cautious in those situations. Remember, our trade plan was buy it at 1750 and take it to 1850. So now we're well above that, so I'm concerned. Okay? So let's remove some of these tools here. Okay? And simplify the conversation. Okay? So I removed the daily or the monthly pivots. The monthly pivots say seriously consider taking profit. I hope you appreciate that. That's not my opinion. That's what the tool says. And then you look at this tool, okay? And what does this say? This chart setup say? On Monday, we are OOP, out of position. That says ride the 4-hour 21. That spike occurred off the 4-hour 21. The other thing it says when you're out of position like this on the open is exit right there. Again, not my opinion. That's just what it says. I'm reading it like a book. I'm reading it like notes on a piece of paper, and I say, oh, this is Beethoven, right? I'm not Beethoven. I didn't write it. I just know how to read sheet music, and I go, oh, I recognize this. Okay, I'm like, oh, I know what that is. Okay, cool. So I would be cautious there. Bear in mind, we also had prices here that said you should be cautious there. Okay, so it raises a level of caution for sure. Let's go in and remove this. Let's keep dumbing it down. Now we don't have that. All you are is a day trader, and you have these trades. And I'll drop this back into the 1 hour. Cool. That just says free and clear plan. But I would say over long periods of time, you need to see that that says out. You need to see that this area here is also out. And it would impact you, because if you don't see that, okay, you buy it here, you buy it here, you tried to buy it there, maybe you kicked it off the 21, you bought it here, you bought it here, everything's golden, you bought it here despite that. But what you may not see now is the probability of this occurring has increased, because some people are going to be getting out. Or some people might say this is where the bulls are getting out, and bears might step in. I don't know. We don't know that at this point, but I would want to know that there's a level of caution built into these prices here, that you should be cautious. Okay. Aaron says, Wayne, thank you for your wise information. I've been kicking butt since I bought your course. Looking forward to swing trading courses with the gang. Awesome. Okay. Cool. Yeah, next time we're in a bar smoking cigars and having cocktails, ask me about my Beethoven story. I got a doozy. Yeah. So make sure we get together in a bar somewhere. I'll save that one for you. By the way, that ticker tape just below said, I think it was the ECB is increasing their growth outlook for Europe. That's cool. So one of the things I talked about, 2 days ago, I guess it was in the live trading group, where I was talking about the economic improvements in France. So now we're starting to see it in ECB language too. Theta, well, I never said that you had to trade my bias. I kept telling you I'm doing something slightly different. Okay? I'm looking at these markets from a different point of view as an investor, right? As an institutional trader. Okay? So that's what I'm doing. That's my needs. Your needs will be different. And we did talk about, 3 weeks ago, that we were at the top of the market. I exited all my profitable trades in, I think, the third week of October. And then we looked at a lot of these setups were hundreds of pips below us. And then I'm like, you have permission to day trade it down. I said, just don't confuse your short-term trading with your long-term bias. I've also asked multiple times, has your bias changed? And nobody said yes. So once again, that's your alpha and your decision-making process. So, right, I'm just telling you what mine is. And very often I said, my outlook is for institutional investing, right? Whereby you're probably doing something, right? So I don't know. I'm not ready to trade against my bias. I'm not quite there yet. Right. So I would explain my outlook of high savings rate, future consumption, future COVID under control, future supply chain liberalization. I don't know, not constraint, whatever is anti-constraint. And I'm looking 2 or 3 years in advance, trying to incorporate seasonality with that. So what's happening over the course of a few days or a few weeks is just a small part of that bigger picture. That's all I'm saying. Cool. So anyways, so I look at this and it looks really good here, but I think there's hidden risk inside of this, right? Okay. But it's tradable. Well, so like Pat's comment as far as my like Aussie, for example, Aussie's interesting. And one of the things I covered in the day trading group, I think it was day trading, it might have been the swing trading group, so it might have been last Thursday, is that any appreciation in the Aussie dollar is going to be directly tied to increases in demand from China, which is increased productivity of China. And it wouldn't be through asset appreciation from Australia attracting investment. Because what we know to be factual under current market conditions is that Governor Lowe has told us it's at least 3 years before they raise interest rates. So Australia is not going to have interest rates higher than the United States for 3, 4, or 5 years. So that part of the flow won't happen. See, if their interest rates were 5% and interest rates in the United States were 2%, investors would want to capture that yield because A, it's not a reserve currency, and B, they get paid, especially leveraged pay. So you might, a hedge fund leveraged 10 to 1 is going to earn, in that case, 30% a year just by buying Aussie dollar and earning interest payments. That ain't going to happen. That's not going to happen this year, next year, the year after. So we have to cut all that out. So all we now have is capital flow, not from like a financial flow of, a hedge fund buying an Australian bond and sitting on coupon payments. That ain't going to happen. So it'll actually be a capital flow to purchase Australian exports like iron ore, gold, and diamonds, right? Coal, baby, coal. So if China is contracting, Australia is not going to benefit because they're not going to be buying as much stuff from Australia. So that's what we need to watch. They're also hypersensitive to the real estate market. So they understand housing prices are high. They understand, but they're dealing with it and the banks are in good shape. All right, so Bitcoin. Okay, we got to do Bitcoin now. Okay. Bitcoin was 68, almost 69, and then it wasn't. I got out of this at 67,000. And yeah, for sure. So I got out here somewhere. Wow. Huh? We went from 69 to what, 63? In 4 hours. That's what, 8%? 8% loss in 4 hours. Okay? Store of value? Maybe. Okay? Maybe. But that's redonkulous for anybody. Even the hedgers. Like, why would a hedger hedge up here, right? So we were talking about whipsaws earlier. Just like that stuff is brutal. It's brutal. It's brutal. That stuff is brutal. And in any market, I'm just not talking Bitcoin. I'm talking about everything. Granted, it's a double top. Okay, so that can be bearish. But imagine now you get the lower low. There's the lower high. and you sell this, which would be an okay place to sell if you were a bear, but then it goes up here, and then you're like, fudge, man, fudge. And then what the hell was all that about? So, these are tricky markets, man. Okay. For a longer term trader, it's a trickier market. Maybe if you're shorter term and you're playing the double top, it's catchable. Okay. Maybe it's catchable. But today's sell zone, as you can probably imagine, is right here. This is today's sell zone. It's a roll reversal, but that's the selling pivots. This is literally a daily sell zone. So that's that. Very difficult to trade. I hope you're doing well on that one. Okay. Hope you're doing okay. So let's move on and do all the yen pairs and all the dollar pairs. Okay. That's that. Delete that. Delete that. Oh. Okay. Update this. Okay. We've made it through that low. I just have to, again, keep waiting. Okay. The interesting thing about this is now this is the projected low. For November. I honestly didn't think we'd get to the projected low, but it's happened. Now, this is in here, projected weekly low. So there's a confluence there going on. Okay. So, gee whiz, Batman. Golly gee whiz. Cool. Golly gee whiz. So that's quite low, and that's that. And it will take some time before I can approach that market as a buyer. Once again, this dropped like a ton of bricks. Okay, ton of bricks. And we were riding above the 21. We did have daily support. We had weekly support. So like if you were a bull, the argument here was a daily. This was a daily. 21 is above the 55. And we started this journey at the monthly M2, right? I highlighted it yesterday. Okay. I knew there was risk here. That was part of the plan. But I thought off of this setup, you would get this, and, work our way up. The equal and opposite side of this, remember we were talking about liberal arts education where you're taught to see both sides. And I did a speech there. You need to see both sides. And the bearish zone is really here. And this is actually the bigger price. This is the monthly M3. So that's right. So up here is the big sell zone. And they took it. They took it. Those bears took it. Okay, bulls did not fight. But here's the thing. If we're going to look at weekly, the weekly sell is here. Okay, now you're like, Wayne, that's a monthly. I'm looking at the weekly M3. It's the same price, but it's the same idea. So if you sold around here, your actual exit would be this green zone. Okay. Now, if you're calling this as the top of the market, then this is the projected low based on that price. So once again, we're right there. And look, we went through the weekly target, but look how quickly we held on that monthly. The same thing with the pound. It came right down to the monthly and held. Okay. So, look, is it buyable? That's going to be your call. I don't know. Okay. I had this one set up. Okay. The zone here, this whole area is a buy zone. There's two ways of looking at a buy zone. You buy it here or you buy it here. There is no other opportunity. It'd be somewhere in the middle, of course, that kind of thing. That's on a monthly basis, and we're still there. So this is still not, necessarily bearish on the long run. It's definitely bearish on the short run because you have support there, break, support here, right? So this could happen next week. That might be a plan we look at. But right now, all I can tell you, okay, is your weekly M3, okay, WM3 predicts exit here. That's the projected low for the week. It's also a buying pivot. So what I'm trying to get you to look at is I'm trying to say, try to see the facts and don't get caught up in, let's say, how you may or may not feel. I just want you to look at it and say, how would a bull read this? How would a bear read this? And I see bears should probably take some profit. I can see a bull might be interested. Okay. I can see a lot going on here. And so be cautious. That's all. Be cautious. Be smart and be cautious. So right now we have a daily pivot that has dropped very, very significantly. So it's not a buy. But if you're a counter trend trader, now you don't really counter trend Thursday, but nonetheless, someone might be thinking this for next week. Maybe. But that's a tall order since technical analysis tells me that. I just don't know if it does something like that. Maybe it's a higher low, okay? But maybe it's a lower low. And that I just don't know. Statistically, on the short run, this is still bearish. And you're like, well, Wayne, how do I make that determination statistically? Well, you can insert your biased pivots, for example, right? Biased pivots. And you go, pachow. Did I enter the right one? I don't think I did I? Custom. What did I do? Biased. No, not biased pivots. Price action pivot points. And you go, pachow. And you're like, oh, well, that looks bearish, right? Let me get rid of this stuff just so you can see it. Okay. If you got rid of everything, so let's clean up some of the noise here. Let's kill the pivots. Let's kill the pivots. Kill the pivots. Kill the pivots. Just got, right? When you look at it this way, that just says not bullish. Okay? Is that helpful to look at it this way? One of the things you could do is you can make a hard and fast rule for yourself, like maybe not a 4 hour. Let's pick a 1 hour. You can see on the short run, it's crazy bearish, right? You might say to yourself, I will not even think of engaging this to the upside until the price action pivot points are pointing up. Sorry, I'm trying to get rid of that. And then when it's up, then you will add things like daily pivots or weekly pivots. Oh, you can change the period depending on the sensitivity, but 55 hours. Okay. I mean, look, you can change this. Okay. You can say over 24 hours. So now you're on an hourly chart, and you can say over the last 24 hours, this market is bearish. Okay. And so you'll wait. Now, a bear is going to do this. That's a sell, and that's a sell. The thing is, I've been doing this on trades where you get this big move, and then I wait for it to come up here, and then I sell it, and I put my stop, and it does this. Like not in this pair, but on other pairs. And I'm just like, well, what the fudge? What the fudge, man? What the fudge? So I take a small loss. So it's not sort of financially hurtful, but it's psychologically tiring. You're like, well, gee whiz, I couldn't have played that better. Right? What the fudge, man. So anyways, so I hope that's helpful. Aussie's going to be a lot the same. Let's move on to the yens. Yada, 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 yada. Yen, 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 yen. So there was a period of time yesterday, the yen was ridiculously weak. It just did this, and it was wonderful. So I bought it like here. I hope you don't mind me talking about my losses. Okay. This is what I did. And the thing is, I'll do it again in the future. I don't think it's that bad. Let me kind of like talk to the judge and jury here. My bias 3 weeks ago was if I could buy it at 80, I would. And it hit 80 and it skyrocketed. We had the big CPI news. It came out as, well, what I would expect, red hot. And the Kiwi yen immediately went up, which I would expect. So all of a sudden we're up here, as I expected. So I said, cool, I want to buy a higher low. So I want to buy a higher low. And I threw down a limit order somewhere just above the next day's pivot points. So let's say a 50% pullback. And it all looked good to me. It all made sense to me, right? Kind of a double bottom on the monthly pivot, higher high, grab a higher low, right? And then shiza. Yeah. So here's the thing, right? So theta's like, yeah, but the moving averages were still pointing down. I'm like, well, you know, yeah. Yeah. You're right. Yeah. Well, it was close back then. They were, right? They were close. They were close. They were closing in. MACD was rising, all that kind of stuff. I mean, look, if it had done this, the 21.55 would have crossed and all that kind of stuff. So anyways, yeah. Golly gee whiz, Batman. Taking a look at PIG. Remember, support, 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 support. Well, look, it's trying. Okay? It's trying. But I'm not ready to be a buyer. It got really close. Okay? So, right. Well, going back to this, remember days ago, I drew these orange lines and I said, there's support here to go to that price. And there's support here to go above that price. Oh, I just noticed on the ticker tape, OPEC is not changing. Yeah. European Commission raises 2021 Euro area growth forecast. Yeah, cool. Yeah, well, that's it, right, Victor? Like, if you're taking a bloodbath drawdown in a situation like this, you're not trading properly. Yeah, James is like, we're not invincible. It is part of the game. You're either patient and disciplined or you're not patient and disciplined. Again, there were lots of reasons why you could have chosen to be selling, but even in the hindsight of that, there are very clear places in which, as a bear, if you stayed short, even though we know it went down, if you stayed short in a lot of those trades, you're actually making the wrong decision, despite you making money on it. There are plenty of places, maybe not this chart, but other charts I've seen, that if you held on, it just would not have been the right decision. And you're like, but wait, I made all this money. It just, you were staying short in a situation where risk had risen, but you didn't adjust. And so you got it, you made your money, but I'm like, ooh, because it's not always going to be that way. In the way that I have had really good trade setups fail, over the next 10 years, I'll continue to do it, and they will not likely fail. In the situation where you may have stayed in a trade and the risk and all that changed, but you didn't adjust and you made money this time, probably over the next 10 years, if you continue that behavior, you will lose money. So it's more like you have to, and this is difficult, you have to separate you making money with good trading and you losing money doesn't necessarily mean bad trading. Now, most amateur traders will buy at the top and sell at the bottom and chase price when they miss. So like, do you remember like this trade here? I don't think I took this one, but imagine this one where it bounced and it went up, 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 and then you bought it because you were chasing. Well, then you really got creamed. What I did to lose money, and again, I don't know if it was this pair or a different pair, but I put I saw it go up, 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 up. I liked it. I believe I understood why, but I put a limit order like way down. So I would have looked at it this way. Okay. And then I might have put another one that way. And I dropped my lot size by 66%. So in some of the cases I put, a trade sitting here and a trade sitting there, and I didn't chase it. I didn't buy it up here. I bought pullbacks at support. Not a bad trade in my humble opinion, but I lost money. But in some cases, traders were doing the wrong thing and made money. And the worst part of that is you're going to repeat it because you're associating the profit you made with good. So I'm glad you made money if you did. I really am. But I want the best for you on the long run as well. Okay. Lucas says these yen pairs are coming off the yearly pivot zones. That's interesting. Cool. Thank you for that, Lucas. So we can try one. Let's do Kiwi. It's less muddied as pound and euro and a bunch of things, but I think which one do I have? Is that the right one? La 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 la. Ooh, so right, huh? Okay. Ooh la la. Yeah, beautiful. Yeah, thank you for that, Lucas. That's cool. So if you were looking at this, we're very, very close. I mean, literally, you could call that 81. You could call that 79.44. But we're right on. You got to remember, we called 80 3 weeks ago, and we're tickling it right now. And if you look at this price right now, okay, the price is here. Okay, it went down to 80. We're at 80.10. So, okay, look at that little wick. Look at the line. That's the price right now. Okay. What else do we know? Well, it's not planting this. Let me turn it off. Now put it back on. Interesting. It's not doing future pivots. Or maybe weekly is too much or not enough. I don't typically use the annuals, but I don't know. Do you guys have the same issue? Not plotting next year's pivots? Just sort of a view here, in case you haven't taken the training course at FX Bootcamp. If you want to learn how to use pivot points, FX Bootcamp is got to be the leading educator on pivot points. I even take a lot of criticism. Oh, Wayne, he's just about pivot points. I think that's oversimplified, but I do like pivot points. Okay. Going back to 2019, you see this? This predicts that. Literally 66.47. Okay. This, the beginning of the year, predicts this, 61.58. Okay. Cool. And what is this? This is an out of position that predicts pink zone. But let's say you're doing a front run. So you got in here at this point, which is the election meeting. Okay. That predicts a high of 84.60. But 82 to 84.60 in general. Interesting, right? I'd also look at this like, I was just kind of reviewing. This November was up. That November was up. That November was up. Okay. And this November is down. Which one's unusual? My guess is this is a November too, but I haven't. Yeah, this is actually the November. So, I like Novembers. This is the unusual one, so I want you to think about that. Okay? I want you to think about that. This year, it ain't working, but on average, it's unusual. And if it's unusual, it may be sort of a correction. It may be short-lived. We might be looking at 2 weeks down, 5 weeks up. But I look at this and I don't say yet that I should throw out my fundamental bias, my long-term reasoning, and trade against my strategy. I just don't see that yet. Now, maybe I'm being stubborn and that's my risk. I don't want to be stubborn. I want to be realistic. Okay? So maybe this has more to do with profit taking. Okay? Now remember, right? Remember, this is October. This is September. This is August. And I told you in February, I'll just pick a number here, a month. I told you in February what my strategy was for Kiwi yen pairs, for example. All yen pairs, but I'm looking at Kiwi yen, so let's talk about it. In February, I said in the third week of August, I would buy this. Okay? In the third week of September, I would buy this. Then I said in October, we will blow through the pivot points, right through them, way beyond M4, all the way up to R3. And it did that too. And stopped probably approximately R3. Is all of that true? Somebody call bullshit if it's bullshit. But if it's true, declare it. And if it's true, we started buying here and we started buying here and we exited here. So I might be wrong. Okay? I might be wrong. I don't see evidence of it yet. If people are exiting because October was crazy, ridiculously overbought, which I called at least 6 months in advance, then maybe this is still some profit taking, some price discovery on disagreements with what's going on in the Fed. But technical analysis says we're at a supportive price. And that still might happen. Right? It still might happen. December last year was up. December the year before was up. Okay? Or maybe we get one of these. I don't know. Dude, I don't know. But this setup looks different than that setup, at least now. So I don't know. Just trying my best. Okay? That's all I'm trying to say is I don't know. I might be wrong. I'm just trying my best. And in that process, I'm trying to explain to you what I'm looking at, why I'm looking at it, how I'm interpreting it, and how I use that to shape my strategic plan and thereby set up technical analysis trades as best as I can. Things like good patterns at projected prices, with patience, with discipline. I've only bought double bottoms or I've only bought higher lows. And many of them made money and some of them have lost, but I've been consistent. I've been consistent. And that's what I want from you, is consistency. And that's what I'm trying to train you to do. Consistency through hardcore planning and thought process and real research. And I'm not ready to give up on that. And so I hope this is helpful. So if you're my swing trading group or my day trading group, we will meet in the war room at 4 p.m. today. 4 p.m. war room for swing trading. And we're going to plan out all of next week's trades. Thank you, Johnny. We'll miss you. American Legion. I've never actually been to an American Legion hall. I think that'd be interesting. So I've been to a few places. I was in the Canadian Army Cadets, and like I said, I joined the American Navy. But that's it. And my children are in the Civil Air Patrol, which is really cool. Very, very cool organization. Very, very cool organization. Like, one of the cool things about the Civil Air Patrol, and I don't know, maybe the military in general, I don't know. But Civil Air Patrol, you meet these young people. They're basically high school kids that are marching around in combat boots, right? But they're coached and mentored and led by former officers of the military. You know, colonels, lieutenant colonels, and so on. Very interesting. But it's a leadership program too. So the kids rank up. You literally go through testing and all that, and you rank up and you take on more responsibility. And I pulled one. There was like kind of an open house to recruit new kids, and my kids had already been in for a while, so they were helping doing that recruiting process. And so the young leaders were there to do presentations and speeches. And I just had to go up to this young woman, high school age. I'd seen her for years grow and become a real leader. And she was good, a young female African-American. And she was on her way to MIT. And you could tell when she said that was her goal, she was going to achieve it. I watched her lead my children. The way that she walked and held herself and looked, and then was critical but supportive, and like, you know, this is wrong and that is wrong and you need to fix it. And she was not fluffy. She was direct. But here's the thing. I pulled her aside and I said, "You're just a wonderful leader, and I just like watching you lead." And she's, "Well, thank you, sir. I appreciate that." And I said, "I don't know if you fully appreciated it, but I don't know any other organization that will teach a young woman to lead men and boys as a leader, not as a girl, but as just a leader." I'm like, I can't think of another organization. I'm like, maybe Girl Scouts, but the thing with Girl Scouts is they separate and they're like, all the girls go over there and all the Boy Scouts go over here, and like, let's do girl things. I'm like, okay, that's cool too. And my daughter was in Girl Scouts, but now she's learning how to be a leader of all people, of all races, of all religions, right? Of all genders. And it's amazing. What an amazing organization. So that's sort of what you do before you join the military and stuff. And so if the military is even half as good as that, what my young kids are learning from a branch of the U.S. military is just fantastic. So my kids are in, air cadets. I was in Army cadets, and then I joined the Navy and stuff. So I have a full appreciation for some of the positiveness of being in the military. And so again, I salute the veterans for the service that they do and the leaders that they are. And I can tell you, some of the best traders and some of the best investors, right? Or many of the best investors and traders, you'll see that have either a military background or an athletics background. Because there's this idea of camaraderie and teamwork and focus and drive and work ethic and stuff that it gets instilled into you. So once again, if you're transitioning out, like David Pegler, remember David Pegler worked for me for 5, 6, 7 years. I got him onto FX Street. I helped him publish articles in magazines. So I celebrated the joy that he brought to trading because he was such a good trader. But I taught him when he was still in the military. And then he transitioned out of the military and became a foreign exchange trader. I'm telling you, he's, not just one of the best human beings you'll ever meet, but he's a fantastic trainer and trader and coach. I'm proud that he worked on my team for all those years. And so you'll see that there's like this just assumed work ethic that someone from the military will bring because they know they've been trained. And so it's a big part. Some of us that were not in the military, like I was in I was in Army cadets, right? So I did have a uniform. I did have combat boots. I did go to military, posts or whatever you call it, where you'd march around and all that kind of stuff. But I wasn't in the military. But I can appreciate from the people I've met in the military that ridiculous, sickening work ethic does not frighten them. Like with a smile. And so I'm a very appreciative to everything that I've learned from the traders I've met that have served. So again, thank you for being a positive influence in my life, and I will see you tomorrow. Cheers.